dropped here. And the question was, what liquidity is best? Because obviously a lot of people will look at the liquidity there and say that this liquidity is the best. But what's the problem with that liquidity, guys? What's the problem with that liquidity? It's very good liquidity, absolutely, but what's the problem with it? What would you say the problem with that liquidity is? It is a paycheck beneath it, absolutely. But what's the problem with that liquidity? There's one key problem with that liquidity. What is it? The key problem is it might not be there. There might not be any liquidity below here because we've already seen a sizable upside. So there's a very good chance that the people that bought here and bought here, there's a very good chance that they've already closed out their positions. So that liquidity vanishes. An awful lot of that liquidity vanishes. So the best liquidity you can get is this failed auction here. That's the kind of liquidity areas that you start thinking about there. So when you look at that situation that I was pointing out to Reeve, in my position, I never had any stops at the bottom edge because I had exited at the top edge. So whilst I had been a buyer of the bottom edges here and here and here, when I got to that price and I saw value divergence, I closed off my position, right? But obviously somebody must have bought here. They never achieved anything whatsoever. So their liquidity is more relevant from a buyer's point of view. Their liquidity here is more relevant than the guys over here. Now, obviously, not everybody that bought here is going to be able to have exited at that price. It's just physically impossible. There's not enough liquidity to have done that. But still, nonetheless, this liquidity here becomes still as important, if not more so, in the short-term scalp nature of things. Short-term liquidity is the people who have made that short-term decision. Because if you're long these trades here, and you've seen the price going up to there and you didn't take profits, you're a long-term trader. Do you think this little shakeout's going to shake you away from the trade? Probably not. So it'd have to go through this area quite a distance for the guys in this area here that were buying to get really freaked. Because obviously they've got a long-term narrative. They're quite happy with this deal as it's standing at the moment. Their objective is still to reach this target price up here. Because otherwise, why wouldn't they have taken profits here? They would always have taken profits right there, wouldn't they? So it's just something to look for when you're watching that short-term liquidity. This is critical. These failed auctions in the background are always critical to try and understand just how much liquidity is evolving in these areas. And when we understand that, we can obviously take advantage of it, yeah. Oil prices have spiked higher. We've came right off that change of behavior at 75.70s. Not a surprise with the euro dollar catching a bid as well in the background. That's the thing we've just been talking about. Commodity risk line has been very bullish actually when oil dropped, and that took away the idea that we were going to make a fortune on the short oil trade. I mean, the commodity risk line is not going to be going divergent against oil for very long, that's for sure.